What's up? I'm Dan Fredenberg, and this is another chance encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house. It's going to be torn down soon. I understand that there are power lines that are just kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with Nkem. Dr. Nkem, how you doing today?
Fine, thank you.
Awesome. And I got some great news for you. It's I don't know if you know this or not, but today my very favorite audience member is joining us. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate syndicators. That means buyers, sellers, investors, all that kind of stuff. Now, why would I do such a silly thing? Well, if you have ever heard about off-market or private deals, also known as 506B syndications, you know that you're not allowed to share your deals with people unless you have a documented prior substantive relationship, or else when the SEC audits you after getting to a certain number of assets under management, you're going to be in a bit of trouble. So that's why I got to know, what are these people in my circle up to? What are they going to contribute to deals and all that kind of fun stuff? But before we get too excited about Dr. Nkem's business, do you want to say a thing or two about yourself first?
Yes, number one, thank you so much for having me. I'm excited to be here. I've been kind of following you, and just to kind of be here is awesome. But my name is Nkem Ezeamama. I'm originally from Nigeria. I'm now based out of Nashville, Tennessee. I'm an ER physician, and I'm a passive investor. I used to be just passive and then switched over to active side and created Phoenix Capital Investment. So just excited to be here and like kind of tell a little bit about that.
Excellent. So the first segment that we have here, it's the five distinct motivations. But before I get to that, I gotta say, but wait, check your eight. And Cam, I don't know if you can see through the camera and into the user's device, but down there at your eight, they might have this hideous subscribe button, and they should really do. Okay, it's a stupid joke. Never mind. Anyways, the five distinct motivations. I've met a whole whack of syndicators and investors and all that kind of stuff, and everybody has their own unique why, but I found that they fit pretty neatly into these five categories. And the important thing why we need to know these is because these deals take months. There's plenty of risks involved. And if you're going to be investing with somebody, you got to make sure they're going to stick with it. So knowing which of these five motivations best describes my guess, it gives me a lot more confidence that I know what's going on. So let's get started. The first one is preservation of purchasing power. Physicians like Dr. Nkem, this is a big one for people like that. But just so that you know what I mean by preservation of purchasing power, some people have a portfolio of assets, and the way that they make ends meet is not from some W-2, it's from the proceeds of ownership, the profits of owning properties. And the only reason why somebody like that would be inclined to make a new acquisition is either if inflation is eating away from the purchasing power of the cash flow, or if they can buy at a steep discount, like when there's an asset crash or when the property is under distress. That's part of my business, but it's not my main emphasis. My main emphasis is this one, which I imagine is probably part of why Incam is involved in this as well, which is trading time directly for wealth. To give some background, I worked for web.com in their CRM wing, and I helped a lot of businesses that were doing seven figures or more in revenue work online, build their funnels and all that kind of stuff. And since 2014, I've been doing that for real estate companies. But what hit me as I was watching my boss make way more than I was, and I was still no slouch, he was flipping 10 houses a month. And I was going, wait a second, I seem to be paying more in tax than anybody. So how can I pivot where I'm being rewarded in the form of deployed capital, aka equity, instead of income or salary as a high income earner and paying all sorts of tax? So that's what I'm up to. But a lot of people, especially if they're youngsters, they get into commercial real estate because they want to control their schedule a little bit more. Now, maybe that means they want to fast track their retirement, but maybe it just means they want to work fewer months per year or fewer weeks per month, fewer hours per week, something like that. But the idea is that it's a dialing back, if you will. But that's not everybody. Some people, they're just plain ambitious. They want to buy their entire hometown. They want that generational wealth to make sure that their great grandchildren never have to hold a day job. And that's why they're making their acquisitions. And these are fantastic people to have on your team because they're going to hustle into their 90s, which is very similar to my last group. Some people, they're also going to be hustling into their 90s, but they've picked a sector of society, or maybe it's animals, maybe it's the environment, who knows what it is, but they figured out you need a very substantial financial backing if you're going to make a really big impact on people. And that's why they're making acquisitions. So, Dr. Nkem, of those 5 different motivations, what combination of those jump out and describe you best?
I think the one that really kind of hits home for me is trading time for money.
Mhm.
And, in the ER, we see all sorts and you see terrible. And so you understand how valuable your time is. And so, a part of what I envision is that I get to do life on my own terms. And that's kind of why this is very appealing to me. Like I still get to make a difference, but it's like, well, what does that look like? Because our time is really short and life isn't guaranteed for anyone.
Yep, exactly. Those birth certificates don't have expiry dates. But the fact is, there are all sorts of risks involved in making these commercial acquisitions. So another thing that I do in each of these interviews is I do this tolerance for risk assessment. And if you've ever been involved in a 506B deal, the securities attorney for the issuer really ought to have had you fill in this questionnaire, which is filled with really invasive financial questions. There's some that I'm sure you're not very comfortable answering, but me as a person who's created all sorts of tests and wizards and exams and all that kind of stuff, the one question I felt it really failed at its job, in my opinion, was the question about risk assessment. And because there are this many risks, you have to make sure that people understand that before you get involved in it. So my version of the question is this fill in the blank question. There are many popular investment asset classes, but I think blank is too risky. What's too risky for you?
Um, and maybe this is because I don't know it or I don't understand it as well, but cryptocurrency is just something that I have not gotten into. And I'm maybe a little wary of the volatility and the uncertainty. And people have done really well, but people have also lost a lot. And so just like that, like I said, the uncertainty and the volatility is why it's just a little too risky for me.
I love it. And of course, a lot of people were real estate, the tangibility comes to mind. You can't eat cryptocurrency, but at least you live in a building. And I
Yes.
always bring that up because of this segue right here, which just kills me. My not so subtle, nudge for people to subscribe. But that is the segue into the part with the Dan Does Deals Commercial Core Competency Cube. It has the 6 different main roles in a deal. And if you want your own copy, you can go to dandoesdeals.com. You can download it and print it out for free. And like a complete dummy, I don't even ask for your email address. And from a marketing perspective, that's the worst thing you can possibly do. It's, give away your freebie without asking for some sort of contact information. But the main thing for me is I realize that communicating effectively on the topic of commercial real estate is probably the number one struggle that people will have to get into this business. So that's why I try and simplify it for it. So I want you to go to dandoesdeals.com, print out a copy, and practice with your friends and family. But I go through all 6 sides in every episode of Chance Encounters, so that way you will know how my guest fits into these deals. So let's get started. The first side I want to talk about, it's the repositioners. They are acquisitions people. So they're looking at a bunch of different properties and they're doing a bunch of paperwork. What is this paperwork all about, you may ask? But anyway, they are underwriting the deal, okay? That means they're doing the math, they're doing the arithmetic, figuring out, first of all, is this property even actually making the amount of money that the seller slash broker claims it is? Because there are some games they can play with the numbers. So the repositioner's job is to find the properties and find upside. Now, one thing that's a little bit counterintuitive about every repositioner's job is they will have investor or financier relations, okay? That's talking to the banks, the lenders, different people who lend money. And the reason why that is a huge part of every repositioner's business is because if you can secure a more advantageous loan, that goes straight to the profitability of the building. So there are plenty of financiers in this industry who have their own fund, things like that, and that's what they're up to. But you have to either have your fund or be licensed or get an exemption. If you want to be on a GP team, you need some sort of actual job that you're doing. And the most common job that people have when they focus on financier relations is operations. It's figuring out those efficiencies, stop those Benjamins from going down the toilet. But of course, there's a lot more than just unclogging toilets and mowing lawns and collecting rent to operations. There's also one thing that's a little bit counterintuitive that I bring to my GP teams, which is I got the marketing and automation chops. The marketing is really important. Even if you are like me and you go for the bigger deals, 100 units or more, and you're outsourcing the property management, you might run into a vacancy issue, too many empty units. And the only way you're going to get them filled is if you have somebody with serious marketing chops who can help that out. So that's one of the things I do. But of course, there's only so much you can do as far as reducing costs in operations, finding out different revenue streams. So very frequently, the repositioner will get a contractor team involved, and they'll do a value add. They'll do some renovations to the units. The idea being that the future resident will be happy to pay more in rent than the previous one, and that is upside. But you have to be very careful when you're working with contractor teams because you can spend endlessly. That doesn't mean that there's going to be an ROI. Like there's no point in gold plating the toilets because nobody's going to pay extra for a gold plated toilet. So the contractors, you have to keep a close eye on them. And if you're anything like me, I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground, somebody who can be there in an hour or two, because you can bet that is not going to be me. I would still be stuck at an airport in an hour or two. So I need somebody who's much closer to the property to make sure that those contractors, they're not using substandard materials and they're not cutting corners and they're not taking too long. And then also making sure that the operations, they're not cutting corners or sloughing photos or anything like that. But when the repositioner has figured out the property they want, they've assembled this team, they'll turn around to the financiers and say, hey, I want to buy this building. Let's say it's 350 units and it's tens of millions of dollars. And they'll turn around to the financiers and say, hey, you want to, I don't know, lend me tens of millions of dollars for this? And the financiers, they're going to have some questions in their mind that I haven't answered yet. And the next one is one that maybe your guru or coach has glossed over, which is, who is your sponsor? What's that all about? Well, if you want to be eligible for a commercial loan on like a 350 unit apartment complex, one of those big commercial properties, one thing that the bank's going to require is that somebody in the fold already owns a similar asset. So if you want to take over a 350 unit apartment complex, even if you are, I don't know, big hypothetical, a physician like Dr. Nkem, and you've got a circle of friends and you want to pool your resources and take it over, this is the thing that is going to be the snag in the plan. Somebody, if you want a loan, has to already own a similar asset. On top of that, you're going to need a certain amount of liquidity. And then among the ownership team, you need a balance sheet of at least the amount of the loan. But if you got all of those pieces, you got yourself a commercial real estate deal. So Nkem, as a physician, I imagine that the fund management side is probably the most direct approach to get involved in these deals. But I don't want to put any words in your mouth. Which of these sides are you mainly focusing on? Is it the investor
You are
relations?
right. You are right. We focus on investor relations, but not only that. So we have just started doing a little bit of the repositioning. So it's like really finding the asset and underwriting it, because I think that is very, very important. And I won't, we won't bring a deal to our investors if it's not like, if we don't underwrite it, if we don't make sure that it's a right deal, it's a good deal, that everyone will be happy with at the end. So yes, we do the money, but we also want to know what property and making sure that the financials are on point.
I love it. I love it. And there's got to be lots of people out there who are doing what you're doing, which is curating those deals, finding the best ones that are out there, and then sharing them with people. It's their full timers, and then there are people who are doing it as a piece of something else. But let's get to the buy box then. So when commercial investors are talking to each other and they're saying, "Hey, what you looking for? What's your ideal property? What's your buy box?" We're really asking about three things. The first one is geography. Where is it? Dr. Nkem's in Tennessee, but that state, that county, possibly even the neighborhood, it's all going to matter. So we definitely need to know the geography. The second thing is the size. Most of my guests on this show are in multifamily, which means apartment complexes. And the way that you define size in an apartment complex is by the unit count, the number of units. And the reason why it's so important is because you have a completely different type of team taking over 5 or 15 unit apartment complexes compared to the 100, 150, 350, whatever, that range that I tend to focus on. The teams look completely different. So that's the size. Now, of course, there are other forms of commercial real estate like industrial or whatever. It goes off of square footage, but that size is definitely going to matter. The third one, though, is called class. And I got to admit, I have a little bit of a pet peeve, which is when people use the exact same word for more than one completely different thing. So I split class into condition and area. So when I'm talking about condition, I'm talking about how old is it, how beat up is it, how up to date is it, and then of course there are the different luxuries and amenities like a gym, a laundromat, things like that. Is it no frills or is it super duper fancy? So that's the condition. Now when it comes to area though, we're talking about things like what's the crime rate like where this property is located? What are the school districts like where that property is located? But really, both of these are about desirability. In other words, how many people are going by that property on any given day. But both the area and the condition, both of those versions of class, they're ranked with the same system as in grade school, where you got A plus at the top and then A and then A minus and B plus and so on. So Dr. Nkem, when it comes to you guys, what's easier to say yes to and more difficult to say no to?
So for us, it's easier to say yes to Class B properties. So we're looking in the Southeast and we're looking for opportunities where we can add value. And so we're not looking for, we want to make impact and we're definitely coming there to change things and to improve the quality of it. But we're not doing like gut jobs and we're not tearing down stuff. So it's easier for us to say yes to Class B properties in the Southeast, kind of around 1980s and above, just because then we're not, like I said, we're not tearing down roofs, plumbing is not a problem. And those are the things that we kind of are good for us. And the things that we would say no to, and also with the Class B, we think that like if we do those things, then we can increase cash flow, which then trickles down to appreciation of the property. And that's what's important to our investors. So that's kind of where we are. For right now, I think Class A properties are just not where we're going after. And I just don't think that there's enough, there won't be enough cash flow, which is something that a lot of our investors are really interested in right now.
I love it. I love it. Okay, great. And then my next question then has to do with people. And my favorite thing about commercial real estate is because you've got these different facets. The biggest thing is like nobody's going to be all 6 sides of this die for any real amount of time. But we also, because it's multifaceted, we're so eager to build new teams and give referrals and help more people build that network and get on their feet. We are really eager to give those sorts of suggestions, but at the same time, because of our unique skill sets, we're better off helping some people more than others. Me personally, because of my marketing and digital background, I've traditionally been looking for more sponsors and KPs because they're the ones who have the foundation already, where a digital guy like me with the experience I have will really make a disproportionately large difference. But also because I'm from the internet, the locals I'm always eager to speak to because they're going to be a huge bottleneck in people's operations. But Dr. Nkem, as far as you're concerned, what are who are you looking for? Oh, and by the way, if you have any 506B deals going on, don't go enticing investors. So if you have like a donut or something, don't wave it in front of the camera. That would be very enticing. But who's out there who you think you could really help more?
So I think that, like, for someone like me who was initially, who started off as a passive investor, I know what that feels like. And I know the importance of it, especially in, targeting healthcare professionals where you want to do what you love, but you also want to grow wealth. And so I understand, like, a part of our core is really education and empowering investors to teach them, this is the reason why this is important. This is the reason why you need to do this. This is the reason why you need to grow your wealth. So I think that's where, that's our sweet spot, where I can really, empower, educate, and tell them, this is the need. We need to know about these asset classes. We need access into it. We have the resources. Let's go put it to good use. That's where I think our strength is.
Beautiful, beautiful. So then my next question then is how to reach out. And me personally, I'm really easy to get a hold of. I got this really distinct last name, but LinkedIn is the best social media platform to reach me because I spend more time on there than the others. But if you pull out your phone and you scan this code right here, that goes to the FAQs page of 506B.me, which is the platform I offer documentation of your substantive relations for commercial syndications. And the idea being is once you get to a certain amount in assets under management, the SEC audits everybody. And what they're looking for is to make sure, were you just pitching people all willy-nilly, especially strangers, because that's a big fat no-no with a 506B. And the idea is, like, what were you doing to make sure that people actually, demonstrated their level of sophistication, appetite for risk, and all that sort of thing. But Dr. Nkem, I see you have your pheinvest.com for Phoenix.
Yeah, okay, it's PHC.
Oh,
I realized that you looked
okay.
looked like an E. It's phcinvest.com, and people can reach me, and LinkedIn is where I'm active, and I definitely love to get a hold of everyone. But yeah, between that, you can get my email address on LinkedIn or at the website.
Okay, excellent. So that's easy peasy. So then the last thing, it's actually not for you, it's for the audience. It's a public service announcement, and I may not be a medical professional, but if you've been watching this episode and experiencing like searing pains in your eyes and like migraine, like I think it's probably that hideous subscribe button right there, and you can just get rid of it. You just click on it and it's totally free, doesn't cost you anything. I want people to click on it because maybe YouTube will start paying for these videos instead of me. I think that would be absolutely amazing. But the trade-off for you is my videos may show up on your list of suggestions, but you can feel free to ignore those suggestions because, quite frankly, I appreciate the fact that you spent this time with me, just like Dr. Nkem. Thanks for joining me today. This has been great.
Thank you so much for having me. I really appreciate it.
Awesome. Make sure you 506B me. Any syndicators, make sure you 506B me. Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.